Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Wednesday, June 21st, 2023. It's 12:20 p.m. Eastern Time as I'm starting the video, and I'll do a quick update on the equity markets as well as some of the other recently highlighted trade ideas, particularly the commodities. That's what I'm watching closely here. But let's start out with the NASDAQ 100. This is the 60-minute time frame. So just to recap, we had this minor uptrend line with this negative divergence here. There's our divergence lines. Broke down the other day, giving us a sell signal. We had minor support here. You'll see that on the 15-minute charts, and also minor support here, which we just hit. And again, I'm going to get to this on the shorter-term charts. So minor support. We've so far had a little bit of a reaction, but I still favor whether we bounce a little more. Max bounce target zone's about right here. I still favor a move down to the primary trend line, which is our swing target right now for QQQ. And I have a comparable trend line on the semis, which I'll get to in a minute. So that's what the 60 looks like. Again, this is very minor support. Active traders, if you're a very active trader, nimble, you have those skill sets, you're using the 5-minute charts, 1-minute charts, 15. It's up to you if you want to try to game a bounce. But for typical swing traders, this is the first really decent support on the 60-minute chart where a reaction's likely, and then ultimately I still favor a move down to the trend line there. 15-minute chart, let's jump down to that. This is what it looks like right here. There's a little trend line break, minor support there, and that was support. I'm sorry, support once broken becomes resistance. So we have actually one more level that, I'm sorry, it stands out to me. We had that gap and all those candles in this reaction high. So I'm going to give you these. This is what I call microanalysis if you are interested. And then, of course, there's a little trend line off the highs as well we need to add here. So as far as what I'm doing now is gauging how far this bounce is likely to go, in my opinion. We have almost maybe a divergent low on the 15 here, not the 60s. I'm going to draw about equal lows here on the indicators and then lower lows there. So here's what is probably the most likely bounce target here, if I'm going to be correct, and we're going to go down and hit those trend lines on the 60. A bounce anywhere from, as I just said, right here, that's former support, now resistance, up to, you can see the resistance zone, price resistance in the downtrend line. So this whole area here, it's not a very big area. I'm giving you a very small area. I call this microanalysis. Only 1% up to the top there at 367.50 from where we're at now. So that would be a likely, and again, what I'm calling my max bounce target zone before we get the next leg down and a reaction likely coming in somewhere around here, that next support. Okay, so that's where we're at. If we go right on through there, and again, we're at the bottom of that potential bounce target zone now, so we could reverse. Let me give you the futures real quick. They will start out here also with a 15-minute chart. That's what we're just looking on QQQ. These are levels I've had on here for a while. That one's pretty well defined, 14,995 on NQ. It's support. We hit it today, and as expected, a little reaction here. My first resistance, it was support right here. Comes in right where we are now, just like on QQQ. Then there's that downtrend line I just showed you on QQQ, and then this is that max bounce target zone. So by my analysis, my best guess is we reverse anywhere from here, which I'm actually leaning towards, all the way up to here. So if you're an active trader, if you covered the support levels, I believe this one was shared in advance today, and you gained this little bounce, or you're looking at a more, that's the max, I would have, a break below here, pretty much below today's lows, should open the door for the thrust down to this next target right here, which is even better support. And so if that happens soon, especially today, early tomorrow, that increases the odds of a pretty good bounce, because we'd be pretty darn oversold on the very short-term time frames, so 5-minute charts, 10-minute charts. And that's 14,870. So just to recap, I favor, this is my preferred scenario. We've already started the reaction. The reaction ends anywhere from where we're at right now as I'm doing this video up to that upper bounce target zone. Then we get another leg down. Let's go look at the semiconductors. SOXX. It's really the only, I believe, in the last week or so, the only sector I've thrown out as a trade idea. So obviously my top pick sector-wise. So far so good. We are up from the breakdown to today's lows. It's been about a 4% drop. Nothing big. But remember, yesterday I highlighted this potential bear flag continuation pattern right there. And we broke down. And so we're heading lower. There is a gap right here. And I think that's where you're seeing some buyers step in as well. See that little gap? Top of the gap is right there. Bottom of the gap's right there. Plus I have pretty decent price support there, about 49.25. And we're just above that. That was the measured target I gave you yesterday for the bear flag. If it broke down where I expected, which is exactly where it broke down, that would put you smack between this 49.25-ish support and then the first target for this trade, which is still T1, covered just above the 477.50-ish support. And I still maintain and believe that this T2 will be hit. That's my, again, the swing target trade for this, kind of a shorter term, typical swing target trade, a trade expected to last days to weeks. That's usually what a swing trade is, sometimes a couple months. Longer term trend trades are usually measured in months, sometimes even years. Okay, so I want to speak to that real quick, and then we'll move on to commodities, and we'll wrap this up. Make this a short video. I'm only 6 minutes into it, and I'm almost done with the equity markets. So I've been talking about the potential, in my views, based on both fundamentals and technicals, that most likely we're in the latter stages, or maybe have just completed the latter stages of a bear market rally. Only time will tell if that's the case. If you share that mindset and you think there's, a drop coming and, another leg down the bear market that's going to measure well into the double digits, 30, 40, even at 20%, whatever you're looking for, I think it's going to be more than 20. If that's the case, then on things like the semis and QQQ, you can certainly, and at this point, there's no reason these trades are comfortably profitable. They're not big gainers by any means, but they're certainly playing out well so far, and they're profitable. Still below our, even my first and minimum target. But at this point, there's no reason to let this trade become a loser. So at the very least, I think you can lower stops to break even right now. Yeah, there's always a possibility we run out and make a marginal new, still divergent high, and then I might be talking about shorting the semis again. But at this point, you can protect profits or at least assure a break even on the trade by lowering stops to entry, because so far it's so good. And if this is the case, then we're probably going to see, and I'll show you a comparison to a previous bear market rally, the selling begin to accelerate, and you can start to move the trade of a bear market rally once it's over and the next leg down starts, is support levels start, the selling begins to accelerate, and levels that the buyers, quote unquote, I'm using my little fingers, little quotation marks, quote unquote, buyers should be stepping in, like right there. T1's a pretty good level. That's where dip buyers should be stepping in, and maybe they do, and maybe it marks the end of the correction if we even get there. But if they don't, if there's a very little to no reaction, let's just say we hit the level, there's a very muted bounce or only a consolidation, and then we go on right through there, it's showing you a change of character in the market, that there's been a very strong demand, a lot of buyers, every pullback for a while now, at least since we had this breakout right here in the semis, and that would show a change of character. So where I'm going with that, if you are looking for much, much longer targets, you can let this trade ride, and it is possible that if we do get down to this T2, the current swing target, which is just, again, a short-term swing target, give you, what did I tell you? I think a 12% gain, 13% of hit from our entry. If we get down there, I guess right now, if I had to lay a guess, if we get there, we'd probably get a good reaction, maybe all the way back up here. But ultimately, if we break down, and there's a possibility we just shoot right down through it, then you have the potential for much larger gains. So up to you. Again, if you get down there, you might want to, instead of having stops break even and giving back 13% profit, which is ridiculous, you would want to lower stops at that point. Where to lower them, usually above, a little bit above where you think a bounce might go, again, assuming we're going lower. In other words, boom, boom, boom would be my guess if this trend line's ultimately going to be taken out. So a stop would be, a little bit above, somewhat above there, and no more than above this 489 and a quarter is just above that, of course. Don't put it right on the resistance level, because if they make a back test of it, then boom, you get stopped out right when it turns. All right, so that's the where how you might want to trade it. And again, if you're you think you're not sure, you're happy with a 12-13% profit, again assuming that T2 is even hit, nothing wrong with taking profits there and or going long to game a bounce. And look, you can always, if that trend line then breaks, you can always get back into those shorts. That's a pretty darn good and probably my preferred strategy right now, to be honest with you, because I think the odds, again, if we get down there, there'll be a lot of buyers, foaming at the mouth to get in the semis on a 13% pullback. I could, and I won't go over all the charts, but I'll just show you NVIDIA down, 2%, but that's nothing, 2.5%. It's still well within, well above the level for me. The big level is about 375 right there. It's the bottom of this trading range. Still have the negative divergences. And then once that level breaks, which I believe it will, NVIDIA, at minimum, you'll probably backfill the gap. There's technically the gap is where we closed the day before down here. This is the technical top of the gap. Actually, the close was on, but there's a reaction high, so that would be a potential target. Again, if 375 is taken out with conviction, come on and backfill that, and that would be a huge drop. I mean, if NVIDIA did that, it's also the biggest component in the semiconductor sector. You're talking now about a 27 to 30% drop. Yeah, stocks is going to go down a lot more. We don't even have anything remotely close to sell signal on NVIDIA, so I'm not even getting excited on that yet. Like I said, need to see this level get taken out. But some of the others are rolling over. Taiwan Semi put in a divergent high. Oh, by the way, NVIDIA, let me just go show you a few charts, time frames, 60-minute charts. NVIDIA, negative divergence here on the 60 as well as the daily. Taiwan Semi, second largest holding, at least by market cap in SOXX. Negative divergence on the 60 as well as the daily. And that's a common theme. Recently made a bullish PPO crossover on the daily. Broadcom, right at uptrend line resistance there. ASML cracking below this trend line right here. I'm going to tweak that trend line and clean it up a little. We're right on it. And I'm going to move this down. Support. Why did I do that? You can see this is this little shelf of support and the uptrend line. So that's it. So if the semis can, if we get, whether we bounce first or not, if we pretty much take out today's lows, we're going to take some additional support levels out. There it is. There's that same trend line I just showed you on the daily. I just jumped down to a 60-minute. Beautiful little trend line, divergent high, and nice price support there at about 698.80 on ASML. So if ASML breaks, I do see a midpoint, a little minor support in the middle, but I think it'll come down here to 606. And and this is both a trade idea for you. I can all but guarantee you, if I go through all the semis, and I'm doing a bunch now, short the most bearish looking setups and ignore or even go long the most bullish, then I'll outperform SOXX. That's what individual stock picking is all about. That's a 14% drop right there if that's hit on ASML. And so that would certainly put some pressure on the semis. So again, some look better than others. This one I had an alert on today. Here's AMD. This was NVIDIA is the current crowd favorite, but back a year ago it was AMD eating Intel's lunch, and AMD had that comparable. A lot of the big semis gapped up when NVIDIA had that blowout quarter and everyone got giddy about their AI prospects. So you had these gaps, and then just like NVIDIA, AMD set up in this little consolidation range here, and it broke it today, and I had an alert go off this morning. That's a solid breakdown. It would take a heck of recovery. It's down 5.4% to make this, to give it a stick save. A stick save means this is a daily candle. We have to close below 117. If it happens to rally back up and gets on it, then it was never a sell signal on the daily, because the daily chart never finalized the candlestick print below 117 for the day. So, but as of now, it's pretty safe to say this one's going to give you a sell signal here. And there's that previous reaction before the gap right here. take that across. We're almost there. And this is really where I think we're going to go down to before the buyers step in, give it a decent bounce, 108.16. So a little more downside. And look, big negative divergence. So this is just the start. I mean, we really had a breakdown here and a back test of the uptrend line. So there was sell signal 1, back test followed by the rejection, sell signal 2. Now this is sell signal 3, and I think before all said and done, at bare minimum, we'll bounce here. This stock's coming down here and more likely to this bear market uptrend line right here, and then maybe even down below that. We'll see where we go. I'm just trying to give you an overview of the semis, how they look here real quick. Texas Instruments, man. Intel. Okay, this one I want to show you 2 more, and then we're going to move on, and I'll wrap this video up. Okay, so look at Intel. Look at this trend line. Beautiful bear market downtrend line. Not a random trend line. This is a trend line that I've been targeting, looking at for a long time, is a potential stopping endpoint for the bear market rally. Remember, Intel was bullish and long back here. Look, pointing out this positive divergence right there. We went long. We had some shorts. We've been in and out. T1, T2 hit off the bottom. Then we broke out of this trading range. Let me just show you a chart here. Okay, this one I posted back on January 2nd, right in the beginning of the year. I wish I could tell you I just sat tight and rolled it, but no, I was in and out. I posted multiple trades, pullback trades, and long entry trades since. But my point is, you can see that this was a logical final target for a bear market rally. We had positive divergence. We put in after this. I pointed out when it came down, then double test that low. That's where we bought it again, and this was a targets in the beginning of the year, T1, T2, and T3, which was this downtrend line. So again, I just wanted to point out that's been hit. So that is pretty much a bear market, a logical bear market target. And look, they didn't just hit it. They sold hard. Since we hit it just 2 days ago, this stock has dropped. Literally, there was that test, perfect test of the downtrend line. Intel's already given up 10.5%. So this is what I was trying to say earlier, in a bear market, when that rally's over, it's like a game of musical chairs. It's a beautiful game to be playing long when the music's playing, everything's going up. You can have the worst entry, worst timings, buy the wrong dips. You're going to be bailed out in an uptrend. But when that music is over, they can usually turn around, and the stocks tend to fall, or the market tends to fall as fast or faster than it went up. Now, with that being said, I would not short Intel here. If anything, you buy it for a bounce. We're pretty good support, that reaction high. Remember those targets I gave you on the way up? Those are the levels that we hit it there. That was from before. I give you these additional targets. They were all here. And now we're there. But again, bigger picture is negative divergence when we rallied into that downtrend line. So ultimately, zigs and zags aside, I think we take another leg down. Same reason, I was long and bullish here off the divergent low and gave you upside targets. Now, can make a pretty strong case for a swing, a multi-week, even multi-month swing trade to the downside. Although, there was your entry right there when the trend line was hit. I just didn't highlight this one then. I wasn't even watching it at the time 2 days ago. And it's not only Intel. You look at Qualcomm, beautiful bear market downtrend line, same thing. Oops, trying to show you where it starts here. There's your downtrend line right there. There's your 1, 2, 3, very distinct high reaction. And then again, another rejection. And if you measure it, we hit that trend line about 4 days in a row. And finally, when the buyers realized that the sellers were overwhelming them at the trend line, this thing dropped 6.5%. Now it's coming up to support right now. Next support 112.35. But again, this may be the start of the next leg down. We'll see. I just wanted to kind of give you that broader view on the semis, show you what it looked like. I don't have anything marked up on the 60-minute chart for you there. Okay, so that's it for the market. Oh, one other thing I just want to show you. Somebody asked about, 2% pullback. Is that normal? We haven't seen one in the SPY for a while. And my reply to that was, yeah, no, it's perfectly normal. When you look at the S&P 500, let me just highlight, this is what I referenced in my response. Here was the first this was the biggest bear market rally up at that point. It was off the June lows. We rallied. The S&P 500 rallied 19%. And you can see as it rallied, had a little bit of consolidation here, and then this final blow off top, buying climax. Nothing but green sticks. A very sharp vertical advance, almost identical to this one right here after that period of consolidation. And here's my point. So no, we didn't have, I don't even think any of these were even 2% pullbacks. It was going up, up, up. In the nature of a bear market rally, again, guys, if this is what that is, only time will tell if it's a bear market rally or we're in a new bull market that has plenty more upside to come from here. Only time will tell. However, what I want to show you that, this is typical of a bear market rally. You have a near vertical advance, and then that's followed once the top is in. We did nothing but go down. We had a little snapback rally here, but before all is said and done, it was almost an inverted V right there. And so that's the nature of it. Once once you get that turn, then it's the other thing in reverse. So we'll see. We'll watch, and you watch. The buyers are going to come in. They're going to buy dips, and then you watch where do they, do they build on those gains or do they start selling the dips? And this is what I was talking about earlier, how at some point after that, the selling begins to accelerate. Look at that massive red candle, red, 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 and another snapback rally, but you get these big impulsive down days. So I'll be watching for that. And that's where sometimes they just slice right through some key support levels. So I don't want to get ahead of myself. Like I said, this is so far, these trades are playing out, but not for much. And, we have some resistance support levels here. SPY is still on a sell signal, just like QQQ, well below the trend lines, the uptrend lines. SPY needs to take out, as I told you yesterday, 430, 481. This is, in my opinion, probably the largest reason. I showed you the NQs and QQQ at minor support earlier. This is probably the reason, in my opinion, we're bouncing. There was a gap right here, and we've had lots of back tests on that level. That's that little potential head and shoulders. So we need to see that level go. And if it goes, next stop in SPY is 429.63, then 426 right there. Those are my next two targets. And that will most likely coincide with another leg down in QQQ as well as the semis. All right, moving on to commodities. Remember, I'm putting a big focus right now on commodities, that reinflation trade, because there's that vicious cycle between inflation and interest rates, which kind of go hand in hand, the stock market and commodity prices. Commodity prices go up, it means inflation's going up. Inflation goes up, it means the Fed and other central banks around the world are forced to continue to tighten. Tightening rates, stock market doesn't like that. Stock market goes down when rates go up. So that's that whole vicious cycle. So we're going to continue to watch this. As I mentioned, this could be viewed to the naked eye, and maybe that's all it will prove to be, is just nothing more than a counter trend rally, like what many that we've had in an ongoing downtrend, right? I've made the case based on Fibonacci retracements, support levels, and other things that this is most likely a breakout with more upside to come, and quite likely the resumption of a bull market in commodities. Again, only time will tell, but these divergences and a lot of other things I've covered recently point to that. And so therefore, we're going to continue to watch it. This box I gave you the other day encompasses the month of June, starting with this first green candle right here, this one. And so far, again, this is not an all-inclusive commodity measure. All-inclusive inflation measure. It does not include services. It does not include housing and owner equivalent rents and all that good stuff. But it is a big part of the CPI, especially because it includes crude oil, natural gas, things like that have been moving up lately sharply, and also, more importantly, have constructive bullish charts that show that there's probably going to be a lot more upside. That's the big thing. Again, because we need to differentiate. I guarantee you a lot of the market participants are not doing that. They're just looking at, okay, and saying this is a trend, this is just another blip up. And if they're right, and that's all it is, then guess what? Inflation's not going to be an issue. So we're going to watch this. The box encompasses the month of June. The CPI numbers, I looked it up in 2023. The reports are anywhere from the 10th of the month, so it'll be August 10th, all the way to the 14th. That's where they range or have ranged for last year. So it's going to be 10 days to 2 weeks after the month is over until we get the CPI. If commodities do this between now and then, well, they're back to where they started. Based on that, at least the commodities component of the CPI index, you would expect a flat or no increase month over month. However, if they hold where they are, or especially go up higher and close the month up here, then you're going to have most likely a hot CPI print. Market's not going to like that. Fed's hands are going to be tied, increasing the odds for another rate hike, and then the market should, believe me, I keep saying the same things. I don't care. I'm a lot of criticism on the site lately. It just doesn't faze me. This is a lot of hot air in the stock market. That doesn't mean that hot air must come out. I've seen hot air and bubbles and rallies just continue to go and go and go, and or sometimes they all of a sudden pop, and it usually takes some type of catalyst to pop them. It's either a technical, fundamental, or more often a combination of the two. In other words, a technical breakdown breaks the support, like these recent sell signals we had, go on. Let's just say, for example, one thing would be to break that trend line on the 60-minute chart, that larger trend line we're targeting right here. You break that, that's going to be a more powerful sell signal. And so those are the things that I'm looking at. And I'm watching this one very closely because there's the, so far, month to date. And let me go back to my daily. That was the red candle right here is where we closed on the 30th of May. 31st, right? Let me put my crosshairs there. Yep, 31st of May. From there through right now as of today, I won't even go to the high. I'll just go to where we're at today. The high was 2 days ago. We're up 7.66%. That would be a hot print again if it included, if there's comparable gains in services, housing, other things like that. So, and imagine if we go up quite a bit more. And then going back to the things that are causing this, including but not limited to natural gas. Put in this huge, has massive divergences. This is the potential bottoming play here with a lot more upside. That we just hit the first target the other day, but that's already a 25% rally off the recent low, divergent low in natural gas. And if we go on to hit just my third target anytime soon, that's going to be an increase of 51% in natural gas prices just since the beginning of the month. That's these candles right here. That's June 1st was the bottom right there in natural gas. So wait to see this reflected in the CPI print. Crude oil carries even a bigger weighting. June right here is the beginning of June. Let me turn off all these lines. Kind of been all the way. Went up, we went down, but now we are up from the beginning of the month. We're up about 7.3% in crude oil there. So natural gas and wheat have been my favorite, and the grains, my favorite commodities. Wheat also bottomed. There's the bottom right there on May 31st, very bottom. So since I'm going to go from the close of business on May 31st, wheat is up 19%, and we've been long wheat since we got in a little early initially up through the trade out right here, right there. And like I said, it never exceeded any maximum reasonable stop. And so even then, we're up 18% from the entry on the original entry, and you may have added to it on the divergent low and everything else. And I give you targets on the daily. So like I said, I think the odds favor reaction here. I got that post out to you earlier today. We were coming up on, and now we fully hit T2. Remember, I list targets that are the actual resistance level. Always sell a little bit below that in case the sellers step in early. We hit a high today of 723. That is every bit a full hit of T2. So that's effectively now hit. And because it's pretty decent resistance, probably get a reaction there and give you divergence on the futures. 60-minute we had negative divergence. But I want to say this too. A lot of times when these commodities turn, they can continue to roar and go up and up and up, and they defy overbought. So yes, we're overbought here, for example, on the daily, but that's not a reason to sell or you have to have a correction. We were overbought here, and we kept going till we were extremely over. And then we put in a divergent high. So I'm just trying to say overbought can and often does become more overbought. Like I said, I think the odds favor a reaction. And if we get one, and you took profits here, you tighten up stops, a pullback to T1 would certainly be an objective entry. But if we just power on through T2 and it's more than just a brief pop with a failure, then we're probably headed up to T3 and T4. So these are the things I'm watching. Wheat, corn, of course, the grains move together. I told you they're all, wheat and corn are almost interchangeable. You know, the grains, you can, price gets too high on one, consumers plus farmers, are feeding their livestock and I'll switch over to the other one. But there's a 24% rally breakout, but it's at resistance. Corn just hit resistance today, and as did the other big grains. Soybeans, you have a downtrend line right here. But again, this is my point here. June, we're up. Soybeans prices have rallied about 20%. So your grains are up about 20%. Natural gas is up over 20%. Crude oil is up, what did I say, 7-8%. And if those gains simply hold from here, but especially if they get built upon, then that is going to be a net negative for the stock market. Okay, I'm going to wrap the video up here. I told you I won't go too long. This is right at there, 30 minutes. Get the video out to you, and we'll continue to watch those things. So you know the levels to watch. You know my thoughts. Got my rough trading plan. Whether you want to shoot for the single or double on the QQQ and SOXX semiconductor shorts, or you want to try to go for the grand slam, which entails using typically wider stops and letting that trade run. Or especially if we break down those those 60-minute uptrend lines. All right, let me wrap the video up here, and if anything big changes before the close, or if I missed anything, I'll get that out to you later. This has been Randy Finney with Right Side of the Chart. Have a great day.